right, good evening everybody and welcome back to Walks and Wall Street. Today is October 18th, 2023. It's about 9:40 p.m. Eastern Time here in New York City. I'd like to start off by apologizing for being late. I am coming from Brooklyn, New York. I had to attend an event, which was an amazing event. We had a broker's open house as well as a community event at 199 Conover Street in Brooklyn. It's an amazing new development that's been put on by Red Hook Partners. It's just an amazing brand new condo, brand new project. It is, again, a 22-unit, very bespoke and boutique project at 199 Conover Street. And we are tasked with selling that here at the Kirsten Jordan team at Douglas Elliman. It's going to be a shorter than normal stream tonight, everybody, based upon the fact that it is getting a little bit late. But I did want to come on here and do a stream because it's a very, very important week on Wall Street. As you know, we are now in the thick of earnings season. And as you know, earnings season always starts off with the major financials. So we heard from pretty much all of the Wall Street mega banks so far. If you tuned in to Walks in Wall Street last night, we did a deep dive into not only JP Morgan Chase, the Bank of America, Goldman Sachs, and others who reported earnings already. We had a couple major takeaways. We put together our own thesis, and we talked about a go-forward of what we think is going to happen in the financial sector in the United States of America. Sorry about that. I would say that the number one thing we need to be watching for, well, there was a couple things. We'll just do a quick recap. Bank of America, specifically, has a pretty large portfolio of mortgage-backed securities that are underwater quite significantly. We talked about why. They piled in a very, very significant amount of money into mortgage-backed securities when interest rates were really low. And as we know, there's an inverse correlation between bond prices and yields. So as you pile into long-duration debt, well, as the Federal Reserve has raised interest rates over 500 basis points, the present value of those bonds are significantly in free fall. Let's just say in very, very harsh decline. So this is very similar to what happened with Silicon Valley Bank. We've explained that, right? Silicon Valley Bank, during the massive quantitative easing and monetary and fiscal stimulus that happened in 2021, well, a lot of that money went into venture capital and private equity. And what do a lot of VC and startup founders, where do they bank? They bank with Silicon Valley Bank. So they took on a massive amount of inflows, and as we know, bank deposits are not assets to the bank. Bank deposits are liabilities. So banks have to find something to do with the money. They either have to lend it out, try to make yield, or they purchase very safe instruments such as mortgage-backed securities and U.S. Treasuries. Problem was there was no duration risk or duration diversification with Silicon Valley Bank. They piled in almost $80 billion worth of long-duration debt, and when everybody wanted to get their money back, well, guess what? They had to force sell assets. The only problem is those assets are worth significantly less now because interest rates are so high. So we're going to watch that across the board. I think much of that risk is probably contained to regional banks, but as we pointed out yesterday, that was a sore spot in Bank of America's earnings report yesterday. Even the CEO of Bank of America, Brian Moynihan, pointed that out himself, calling it a thorn in the side of the bank. So we will keep tabs on that. I think the most notable earnings report that came out after the bell today was by Tesla. So ticker symbol TSLA. Obviously the CEO is Elon Musk, and he is sounding very, very pessimistic on the economy overall on the earnings call. So Tesla reported adjusted earnings of 66 cents a share versus the consensus on Wall Street. They were expecting about 73 cents of EPS. So big miss on the bottom line there. Total operating margin came in at 7.6%. I'll say that again. Total operating margin came in at 7.6%. That is down significantly from a year ago, coming in at 17.2%. Now, this has really been one of Tesla's claim to fame, right? Many analysts on Wall Street who have been very, very bullish the stock, and rightfully so. One of the, I would say, major characteristics of being bullish on Tesla over the last 5 to 10 years has really been the higher than average operating margins and gross margins, right? If you look at industry standard from GM and pretty much all the other auto OEMs, I mean, your margins are in the mid-single digits, maybe. So one of the biggest attractive value propositions for Tesla is that they have double-digit gross margins, but we're seeing a little bit of an impact to operating margin here. We'll see if that can persist. We also got an update on the Cybertruck. Elon Musk cautioned that the Cybertruck would not deliver significant positive cash flow for 12 to 18 months after production begins, and emphasized that the company is focused on making its cars more affordable amid a high interest rate environment. And this is really what we've seen, right? Tesla, time and time again, I think this is the 5th consecutive price cut across the board on some of their models, particularly the Tesla Model Y. So Elon Musk is essentially looking out, and I would assume his viewpoint is that interest rates are going to stay higher for longer, right? I mean, we'll talk about mortgage rates in a moment, but if we sort of shift gears, if we go to cnbc.com/bonds and we take a look at the yield curve, well, look at this. Well, a 1-year U.S. Treasury now is yielding 5.5%, and the 30-year is now breaking 5%. So think about what that means for auto loans. So Elon Musk, if he wants to drive a lot of traffic, I believe his thought process is, look, it's going to be a higher interest rate environment for longer, so we need to bite the bullet now and make cars more affordable in terms of a cheaper price, or else nobody's going to buy cars, right? Nobody's going to buy vehicles because if you have $100,000 vehicles, right, like the Tesla Model X's, and the vast majority of people need financing for these vehicles, well, guess what? Doesn't look like that's going to happen because rates are extremely elevated. Now, tomorrow's live stream, we're going to be doing a deep dive into Tesla's earnings report. Just for the sake of time tonight, we are not. We just gave a quick overview, very high level, of some of the bottom line and the top line metrics, and a little bit of an outlook for the production of the Cybertruck. Some breaking news in the bond market here, team. The 10-year U.S. Treasury yield went up yet again today. The 10-year is yielding 4.949%. Now, why is this important? Well, if you think about the housing market, if you think about the number one product as it relates to mortgages, the 30-year fixed-rate mortgage has a very high correlation to the 10-year U.S. Treasury, which is considered the benchmark. So, some breaking news here, according to Bankrate.com. Once again, according to Bankrate.com, for the first time in a long time, over a decade, the average 30-year fixed-rate mortgage is now 8%. Now, if I had to make a little bit of a prediction, I think within the next 5 months, we're going to be looking back on this live stream and saying, wow, 8% on a 30-year fix, that actually wasn't too bad. I think interest rates are going to continue to go up from here, particularly after that horrible inflation report that came out last week. If you want to read our free newsletter, the Behind the Street newsletter, if you scan the QR code on the screen and punch in your email every other Thursday after the market closes, you are going to receive an email from me, and it is going to be a full encapsulated equity research piece, as well as full market update. So if you want to receive my full market thoughts on the global equity market, the fixed income market, currency markets, and real estate market, not only what I'm seeing on the ground floor here in New York City and Miami, but worldwide, please do it right now. Scan the QR code, punch in your email address, and we just sent out the newsletter, and we did a deep dive into the inflation report. We did line item by line item by line item, breaking down CPI and what that means for interest rates, what that means for monetary and fiscal policy looking out into Q1 of 2024. Very important, and I will be making that available for free for everybody who subscribes to Walks on Wall Street. Again, every other Thursday after the market closes. If you punch in your email address, scan the QR code, you will receive all of my research for free. It's a great way to support the channel and to stay informed, just in case, God forbid, you miss a live stream and you want to be in tune with what's going on day to day. Well, guess what? I will send you a recap in the newsletter. So I'm going to go ahead and close up the laptop here, everybody. I want to thank you all for joining us tonight. I apologize for being late. We're going to be walking towards 59th Street, Columbus Circle tonight, and we will get started. So allow me just a moment. All right. Let's see who we have in the chat. Let's say hello to everybody. Most important part of the stream, saying hello to the team here. I guess it's appropriate to let you guys know where we are reporting live from, right? We are outside the very famous, check this out, the very, very iconic 432 Park Avenue building. Look at that. We are reporting live at the little patio space, the outdoor space. It's a beautiful night. You can see all the clouds in the sky here. And you're looking at 432 Park Avenue, which is a Harry MacLeod building. Now, we have a little bit of news coming out of 432 Park Avenue. Before we left for Miami, the big news on the street was that CIM Group is going to be moving forward with their foreclosure proceedings on Harry MacLeod's personal units at 432 Park Avenue. That has now been on halt. So I will keep you guys updated as we have more news and more data coming out of that fiasco over there. And Park Avenue, you have one of the newest Class A office towers here in New York City. It is 425 Park Avenue, and this is the temporary home of Citadel Securities. If you remember from our Miami live streams, right on Brickell Avenue, they are breaking ground on Ken Griffin's brand new mega tall structure, which is going to act as Citadel Securities' corporate headquarters. However, some more news. Right here on Park Avenue, Citadel Securities and Ken Griffin has decided to go forward with plans to build yet another Citadel exclusive office tower, and that is going to compete with this building all the way down here. And that is 270 Park Avenue. That is going to be the brand new JP Morgan Chase building. And that is where our good friend Jamie Dimon will be working out of. All right, let me say hello to everybody in the chat. I see Pristine, Jafet Perez, DJ Chris, Joe C is here, Joe Ratz, British Gray, Lance is happy Wednesday, thank you so much. Christopher Downer, welcome. Sunshine After Rain, Jen Claus, Brian is here, Richard Vogel, Gustavo, JC. This is Tom, is your Bitcoin article available yet? Not yet. So here's what I'm trying to do with that. I have an acquaintance that's an analyst at Reflexivity Research, and I'm going to have him try to write a guest piece for our company here, Behind the Street newsletter. And once I can tee that up, I think you guys are going to be quite impressed and eager to read that piece. So not quite yet. This is the Aston Martin showroom. Now on Park Avenue you have not only the Ferrari showroom, but now you have the Aston Martin showroom, which I think is pretty appropriately placed, right? I mean, you have all of the hedge funds, major investment banks right here. So come bonus time, you can do some window shopping for an Aston Martin, I guess. Hey, Joan K is here, what's up? Good to see you, Valor Abbott, John Casey. True24 KT says howdy. What's up? Boomer Tuber says thank you for coming out tonight, Tom. Well, thank you for joining us. I really do appreciate that. So for those of you who don't know, tonight was a pretty big event. Our team threw a broker's open house and sort of community event at 199 Conover Street, which is a brand new boutique condominium in Red Hook, Brooklyn. It is really an amazing place. It's an unbelievable building. It's about 22 units in total. It's just about 60% sold out. And we hope to sell out the rest of the thing by Q1 of 2024. So if you want to check that out, if you go to Street Easy, you type in 199 Conover Street, you could check out some of the units there at the Conover. Or you can check out some of our property tours that I've posted here for free. And we are the lead brokers on that deal. Michael Rodriguez is top pick for first-time hotels in New York City. So what's your budget? That's an interesting question, because you gotta really let me know your budget. Now, speaking of hotels, this hotel has been closed down since the pandemic. Isn't that a little bit crazy? This is the Four Seasons Hotel right on Billionaires Row, and it is completely closed down still, which is a bummer because, you know, the city is pretty much recovering from the pandemic, but the owner is still having a dispute with the city, I guess, over back taxes, I think. Kind of crazy. Hey, Molly Duran, what's up? Hey, UniJ23, welcome. Josie says, Tom, is Chipotle going up because... I don't know what that means. Well, yeah, Chipotle raised a lot of their prices. They raised prices 3 times in a row, right? Back to back in 1 year. And I just think that's food inflation, right? We talked about the CPI report that came out last week. There's 3 specific categories that are giving us a lot of problems, okay? And it's all the categories that matter, right? Not to sound too pessimistic, but it's kind of the truth. All of the categories in the CPI report that have been giving us problems, right, causing a little bit of sticky inflation, they're really only the categories that matter, right? Number 1, food inflation. It continues to rage. Shelter costs. You know, shelter costs are rolling over. We wrote about this in the newsletter, but that is still relatively elevated. And energy, right? I think those are the 3 essentials for anybody that just wants to live a basic life. You know, you need to eat or you'll die or you'll starve. You need a place to live or you'll be homeless on the street. And you need energy, right? You need electricity, you need gasoline, you need crude oil, you need, you know, home heating oil. And the problem is, as we're looking at the main entrance of 432 Park Avenue, the Federal Reserve focuses more on core CPI. Now, we've reviewed what this means before. So headline CPI includes volatile food and energy, but the core CPI number excludes volatile food and energy. And the Federal Reserve puts a little bit more weighting on core CPI as opposed to headline, mainly because, again, of the volatility of those prices. But, I mean, what do you guys think? Because every time I go out to eat in Manhattan, and I think I've said this before on the live stream, I even noticed the lunch that used to cost me $12 to $15 now costs me $20 to $25. And I had a conversation with my friend the other day, and he said the same exact thing. You know, before, we would never really look at the price. Not because, oh, I'm so rich, I don't need to look at the price, but because I expect to generally pay, you know, $12 to $15 for lunch in Manhattan. The same places, right, pre-pandemic, that were $12 to $15 are now $20 to $25 in Manhattan. It's kind of crazy. I mean, are you guys sort of seeing the same thing in the cities that you live in? I mean, just prices have really gone out of hand. It's just really crazy. Hey, Juan Fernandez says, but I also believe some companies are overcharging beyond inflation. Well, do you have any examples? Do you have any like specific examples where you could point to the company and say, oh, they're overcharging? Because maybe you're right. Maybe you are right. I just think we need a specific example. Yogi is here. What's up? Hey, Paul Burnell says, Tom, do you see, or did you see that Walmart will be removing inflation prices? 3.7% higher than last year. We'll be removing inflation prices? I don't know what that means. So you mean they're going to reduce their prices for turkeys? No, I didn't see that. I didn't see that. Hey, Dan Zhang says, I use the price of chicken over rice as a way to measure inflation. They used to be $5, and now it's between $8 and $9 for chicken over rice. Well, maybe that's in Queens, because in the city, chicken over rice sometimes is like $12 to $15, but I definitely get what you're saying. It's definitely expensive and getting more expensive. Carol Brown says, yes, same in Michigan. They also want more in tips. You know, the tipping culture in the United States has gotten a little bit out of hand. I've noticed that when you pay for something with Apple Pay or Toast, they'll put the default tip setting to 25%. I mean, even if the employees don't do anything, I think it's a little crazy. It's gotten a little bit out of hand for sure. I definitely agree. Molly says, I had to cut me a budget. Delargo says, hey Tom, when Fed turns on the printer? I don't know. I don't think anytime soon. I really don't. I believe inflation is entrenched in the economy, specifically in food and energy. But the good news is this. About 40% of the CPI number is shelter costs, right? That's 40% of the entire gauge. And as we've wrote about in the Behind the Street newsletter, we broke this down line item by line item. At the turn of a business cycle, asset classes correct in order of liquidity, generally speaking, right? Not every time, but generally speaking, asset classes will correct in order of liquidity. So as interest rates go up, the more liquid the asset class is, the faster it is to reprice. So for example, equities or stocks, they're very, very liquid, right? There's tons and tons of liquidity. So as interest rates go up, well, guess what? Traders and investors can reprice those assets very, very fast. I really quickly want to point out this building. This is the Steinway Tower here. It's the skinniest residential apartment building in the entire world. And this building is Central Park Tower, a Gary Burnett building. And right here is Trump Tower. We're standing right behind Trump Tower. And then once again, that is 432 Park Avenue. So we'll do a quick explanation because I think that it's good to sort of talk about, because you know there's a lot of, I would say, mixed messaging on Wall Street. Some analysts and economists think we're going to go into tightening again, or tightening even more. Some think that we're going to go to an easing cycle immediately, just because you know, the Fed could potentially break something. So we're about split half and half down the line. But you know, as interest rates go up, and Bill Ackman did a talk about this, and he explained it very well. He's like, as an investor, our duty and our role and our responsibility is essentially to determine the present value of a company's future cash flows. So I'll say that again. Your job is to determine what is the present value of this company's future cash flows. And as interest rates are held artificially suppressed, well, those companies could go through a multiple expansion and trade at crazy valuations, because the present value of that company's future cash flows is worth more because the discount rate is really low. Well, here's what happened. We are now in the most aggressive tightening cycle since Paul Volcker. So essentially what happened is, as the Federal Reserve has been raising interest rates, well, if you're an analyst at a bank or a hedge fund, you now have to adjust your discount rate on your discounted cash flow model. So as interest rates go up and as the discount rate goes up, well, guess what? The present value of the company's future cash flows also goes down. So traders and investors have to reprice that asset for a higher interest rate environment. Now, it happens much quicker in the stock market because the stock market is very liquid. In the real estate business, it takes a very, very long time because the real estate market is relatively illiquid, right? It's not like you could go on your Charles Schwab or Interactive Brokers account and, market sell your house, right? At least not yet. But you can sell, $30 million worth of Apple stock from your bedroom, literally. So it takes about a year or two for interest rates to really start to affect the housing market. And the reason why I'm explaining this, and I think this is why it's so important, is because of the following. If you think about monetary policy, who sets monetary policy in the United States? It is the Federal Reserve. And one of the main metrics or the main key features that the Federal Reserve looks at, or I should say a data point, as they make their monetary policy, it's the CPI, right? It's the CPI number. And 40%, again, 40% of CPI is shelter costs. So shelter is starting to roll over just now. We're just now starting to see shelter roll over. But we've seen a repricing in equities in 2021. So the good news is, if shelter really starts to roll over here and unwind, which I think, and that's sort of what I'm betting is going to happen, right? I could be wrong, but I'm just sort of betting that's what's going to happen. You could potentially see CPI right back down to 2 or 3% in a hurry, right? And that would be the 2% Fed mandate. That's really the last nut to crack, so to speak. But again, if you want to, sort of have a visual of that, I literally wrote this thesis out for all of you to read for free. I know we have a lot of new people here. So if you scan that QR code and you punch in your email, the newsletter I published on Thursday outlines exactly that thesis. Asset prices, repricing in order of liquidity, what that means on a go-forward basis, and which sectors in the real estate market are most susceptible to price declines. Is it residential real estate? Is it commercial real estate? What is it? We wrote and published that thesis for free on our website on Thursday. So if you want that, just scan the QR code, punch in your email, and every other Thursday, we will send you all of our equity research for free. The QR code has been working well, by the way. I'm just doing some A/B testing on the QR code as opposed to the link. So sorry if I'm spamming you with the QR code. Hey, Ryan Beck, what's up, man? Good to see you. Hope you're well. Thanks for joining our very late night stream. I was late again, but I was coming from Brooklyn, New York. Sal says money and lifestyle all relevant. I know millionaires living like middle class and vice versa. Good to see you, Sal. Brian Forrest is here. What's up? Melissa 2087. Good to see you. Bree Grams, what's up? Now, does anybody have, and we're going to do a deep dive tomorrow, but does anybody have any high-level thoughts on Tesla's earnings report today? Any takeaways? Because there was I was a little disappointed, not going to lie. Again, we'll go into that a little bit in more detail tomorrow, but any high-level thoughts? I guess one thing we could look forward to is the Cybertruck. Production of that should be starting soon. Hey, Susanna Q4, thanks so much for joining. I think this is an amazing shot of the Steinway Tower here. Look at that. It kind of makes it look like Gotham City. Looks like a Batman movie, actually. Hey, Steph UF, what's up? Says, hey, Tom and team, welcome. Ryan Beck says, how was your event? The event was really good. It was really successful. We had a really good turnout. I think it brought a lot of exposure to the property. And we even had some existing residents of the building show up too. So it was fun. It was a really fun time. The weather was great. There was an insane sunset in Red Hook, Brooklyn. So I thought it was fantastic. Our project is 199 Conover Street. The developer is Red Hook Partners. Brian says, what do you like better, New York City or Florida? It's a tough question. It really depends on the time of year. But I'll answer the question like this. I want to set my life up to where I could spend 6 months out of the year in New York and 6 months out of the year in Miami. Particularly when it's winter in New York, I want to be down in Miami and sort of vice versa. But if I couldn't choose one, if that's the question. Like, I don't think I could choose one. I don't know. Yeah, I don't think I could choose just one. I think that'd be too tough. Oh, nice. Melissa 2087 is going to Baltimore. I love that. I know. Ryan Beck, that would be great. Ryan Beck says, wouldn't be surprised if someone in the building already upgrades or buys another unit. That would be fantastic for us. So we're about 60% sold out now, which is great. And there's only 22 units in the building, so it's very bespoke. We sold a couple units, and it's about 60% sold, so hopefully we get a total sellout by the end of the year. Look at that. They have a model unit of the Steinway Tower inside the Steinway building. Chandelier looks awesome too. Sal's is perfect scenario, 6 months in Florida, 6 months in the city. Yeah, I mean, I think you're right, Sal. I mean, I love New York City, right? Don't get me wrong. I love, love, love New York City, but here's the thing. I'm just not a big fan of the cold. The cold is a drag. I don't like it. Some people like it, I don't. As we go through the maze of scaffolding here. Explode V2 says, do you know of any events in tech in New York? Yeah, tons. It's Tech Week in New York. So there's tons of events going on all week. It is Tech Week. So yeah, if you want to go to any specific events, send me an email. I'll be going to some events. Yeah, I was even thinking about hosting a tech event. So stay tuned for that. But yeah, if you want to send me an email and if you're going to be in New York City this week and next week, yeah, there's some really good tech events to go to. Hey, A Simple Life is here. Hey, Thomas and everybody, what's up? We are now passing by a 5-star hotel here in the city. Unfortunately, it has scaffolding all over it. This is 157. You have the Park Hyatt to your right, and then you have the residences all the way over on the second door. And it's right across the street from the Russian tea room too, so pretty cool. Melissa 2087 says, my in-laws do 6 months in New Jersey and 6 months in North Carolina. You know, I've been noticing that trend. I've been noticing a lot of New Yorkers and people from the Northeast choosing the Carolinas, particularly South Carolina. I wonder why that is. I even have some friends that were software engineers. I gotta give my friend a shout out here. My friend's an artist that does all the art for the Park Hyatt. Really good guy. And I think his art is very unique. So if you're interested, you could DM him on IG or send him an email. He's a really nice guy. He actually does custom pieces for your home too. So if you just bought a really nice apartment in Manhattan or a nice penthouse and you want custom artwork, he'll do that for you too. If you need help with that, send me an email and I'll connect you. But he does all of the work for the Park Hyatt here in New York. And he has his gallery right here. Really talented guy, really beautiful. Hey, Jonathan France, thank you so much. DJ says it looks blurry. I don't know, I think we're streaming in 1080p. Maybe it's just you. Hey, Terry Wells, this is Tom. What about credit card debt? It's a black hole along of people can't climb out of. Is it at an all-time high now? Yeah, so Terry Wells, it's a great point. We talked about that in depth yesterday, but we could definitely talk about it again. I'll say this. It's the beginning of earnings season. And at the beginning of every earnings season, all of the financials report earnings. So you have all of the major banks and a lot of the big credit card issuers, such as Bank of America, Citi, Wells Fargo's another major credit card issuer. And one of the things we were talking about last night, and this is going to be in next week's newsletter, is we're starting to see a return to normal, but not in a good way. Return to normal in the worst way possible. I think that's going to be the headline for next week's newsletter. What we're seeing tick up now is delinquency rates for credit cards. Now, in 2021, you had some of the lowest 30, 60, and 90-day delinquency rates in history for credit cards. Now, why was that? Well, it was because the government gave everybody a bunch of free money and people were actually using it to pay down their debt. What happened? People got a little bit carried away, and now that all the free money is gone, and now that money is very expensive, and now that unemployment is ticking up, and consumers have essentially eaten through all of their pandemic savings, a very critical thing that we're seeing amongst a lot of these banks is the following. 30 and 90-day card delinquencies are now almost back to where they were at the start, or I should say pre-pandemic. So you're talking about Q4 of 2019, so just before the pandemic. And usually those numbers are about 3%. You know what? Actually, I'll do you one better. If you type exclamation point BAC, okay, exclamation point BAC, this is the document we reviewed in last night's stream. And this is the Bank of America earnings deck. So this is the deck that Brian Moynihan presented to all of his investors, and it'll show you, I think it's slide 7, it'll show you the 30 and 90-day delinquency rates at Bank of America for credit cards. And it's not yet to pre-pandemic levels, but it's getting there in a jiffy, let's just say that. So you're absolutely right, Terry. This is something we need to be paying attention to. These are emerging trends, and we need to be looking at the leading economic indicators to sort of predict potential higher waves of defaults. This could be very bad for the banks. As you've said, according to the Federal Reserve, consumer debt is now at an all-time high. So this is one of my favorite buildings in all of New York City. This is West 58th Street and 7th Avenue, and we are looking at Alwyn Court. Look at how gorgeous this building looks. Doesn't that look amazing? The architecture is really unmatched. And one of the things I love about it, it has such a stark contrast between the buildings in the back. You have the old New York in the front with Alwyn Court, and then you have the new 157 and Steinway Towers in the background. Obviously, 157 was the first building ever on Billionaires Road, developed by Extel, that is Gary Burnett's company. And then we have, I wouldn't say my favorite, it's growing on me though. It's the Steinway Tower, but again, you have beautiful architecture between the two on Alwyn Court. We'll walk up to Central Park South, which is going to be 59th Street. Hey, Jade112, thank you for joining us. Hopefully you're well. Sabina Sanchez, good to see you. Wow, Terry, this is also a medical hip replacement, cost me $30,000, and the MRI was $1,200. Oh my gosh. Well, first and foremost, most importantly, hopefully the surgery was a success, and hopefully you're feeling better and you're getting back to being healthy. I think that's the most important thing to say, firstly. Secondly, yeah, that is another major expense in the United States, is healthcare. The cost of healthcare is insanity, particularly if you work for yourself, right? If you're a sole proprietor or you own a business, it's extremely expensive. This is the Trump International Hotel and Tower, and the building next to it is 15 Central Park West. Now, speaking of healthcare, guys, I had to go to the dermatologist. I go to the dermatologist once a year, right, for my vitiligo. I go once a year, right? You have to go once a year. I go once a year. For one visit that takes less than 10 minutes, and I'm not exaggerating, by the way, it physically takes less than 10 minutes. It's $250. To me, that's just insane. $250. Now, my dermatologist is fantastic, and he deserves every penny he makes. Very hardworking guy, but I mean, he literally just looks at one spot in my body and says, "Hey, Tom, you're good. How is Miami? How's everything going on in Miami?" Yeah, Doc, everything's good. Miami's great. Oh, well, you look good. So I'll see you next year. You can book the appointment. I'll see you next October. That'll be $250. I feel like that's a little crazy. Sabrina Fair says, I had vitiligo too. Ah, nice. Yeah, you got to make sure you cover it with sunscreen since there's no pigment. You could definitely get burned there. We just passed 200 Central Park South. I know, Stephen Bate, right? But look, they deserve everything they get. I'm not complaining, but I am complaining. I'm not complaining, but I obviously am complaining. I just got to suck it up. All right, some good news. We have Maria that just opened here. Wen Zong says $250 is not even enough to cover the cost. Lots of administrative costs. Hospitals are losing money. You are 100% correct. In my previous career, I worked I was in tech sales, but I worked with all of the major hospitals, nursing homes, and home health care agencies in New York. And you are 100,000% correct. It is razor thin margins, particularly in the home health care business and nursing home business. One of my accounts was New York Presbyterian. We did all of the pretty much infrastructure. So if anybody's ever been in New York Presbyterian Hospital in New York, if you see all of the iPads, iPhones, tablets in there, we essentially administered all that with their Epic software. It's called Epic, is the medical software. that many use. And we would also administer their MDM, which is a mobile device manager. It's sort of like a cybersecurity software that protects endpoints. But you were 100% correct. The administrative costs, it's staggering, very, very staggering, and they are running on razor thin margins. So you are correct. Hey, Mimi is here. Says, hey Tom, I have to do an implant, approximately $4,000 for one tooth. Whoa, really? I had to do a tooth extraction and I paid $950. That's insane. That's insane, dude. Hey, Guardian of Chaos. This Tom survived 25 years in law enforcement and earned every bit of health insurance. Private sector is a slippery slope. Well, thank you for your service, first and foremost. We appreciate your service to, I'm not sure where you were a law enforcement officer, but wherever you were, we appreciate the service to the community. William Kaiser says, get used to it. America is all about money, money. I mean, we could have a debate on healthcare all we like. It's a lot bigger than just that, but everybody, we are looking at the Deutsche Bank Towers. This used to be the Time Warner Center AOL Tower, actually. And did you guys know, right in this location, it used to be sort of an older Javits Center. It used to be like a big event place. And once Jacob Javits Center was built, this one that was in its place was all abandoned and run down. And this was actually not too nice of an area. It was actually not a pretty neighborhood at all right here, which is surprising, right? Because it's right at Central Park South. There was actually a bus stop here that was used to take family members to visit their relatives in prison, right in the corner here. And related properties, a related group actually stuck their neck out and said, look, we'll buy this plot of land and we're going to build these AOL Time Warner Center, where you have residences on one side, you have a hotel on the other, mixed use building, you have retail here, and you have office. I really like the building, actually. It's one of my favorite buildings in New York. There's a Whole Foods in the basement, but so many people thought the project was going to fail because they said, you know what, after 9/11, I don't think anybody would want to live in a building that kind of resembles the Trade Center with two towers. So everybody thought it was going to fail. It was actually a massive success. And after that, sort of made way for 15 Central Park West, which is right up here, which we'll explore here in just a moment. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We go live every day, pretty much, starting at 8:30 p.m. Here's another view of Billionaires Row, however, this time from the other side of Columbus Circle. Hey, Victor's here. Truth Teller is here as well. What's up? LA0070 is here. Goldie says dental care is out of control. I pay over $300 every 3 months. Really? Wow. Yeah, I mean, you know, that's one of the other reasons why a lot of people, you know, always stick to working for a company, right? Because chances are, if you work for a company, you're going to get great health insurance at a very, very affordable cost. You know, if you work for yourself, I mean, if you have a family of 3 or 4, I mean, you could spend, you know, $4,000 to $6,000 a month just on health insurance, which is a really scary thing to think about, honestly. Is anybody here in the chat work for themselves or own a small business, and maybe you want to chime in on what you pay for healthcare? It's 220 Central Park South with the gold top, and you have Central Park Tower right there. It's a beautiful night in New York. Let's walk by the, I should say around, the Trump International Hotel and Tower. We'll just make sort of like a big loop here. Hey, Tariq Khan, good to see you. Thanks for joining us. Austin City Limits says I do landscaping for a living. Hey, Tom says, will you be going to Soho, the cast iron district? Not tonight, but maybe we'll do that tomorrow. It's actually a pretty good idea. Maybe we'll do that tomorrow. We'll do a walking tour of Tribeca and Soho. I actually want to get down there. I haven't been down there since I've been back. So we'll definitely do that. Yeah, for sure. All right, here is the hotel. It actually looks pretty packed tonight, not gonna lie. Hey, Wen says you could work for yourself and then get health insurance from your spouse. Well, assuming you have a spouse, right? Loyal says, can you survive in New York City on a $100,000 income? Yeah, absolutely, 100%. I think that narrative has been going around. I think that's just like kind of a cringy, just for lack of a better terminology, I think that's such a cringy narrative. People are like, you can't survive in this city on less than $150,000 a year. To which I say, you guys are well aware that New York City has some of the most impoverished population. Like there's a lot of people in New York City that are making less than $50,000 a year. Is it an expensive city? Absolutely. Is it one of the most expensive cities in the world? 1,000%. But to say that you can't afford to live in New York City on a $100,000 income, I think is a little bit disingenuous. And I'm not responding to your comment particularly. I'm just saying like there's been a lot of articles coming out saying that. But I mean, think about this, right? Let's say if you even rented like a studio apartment, and rents are softening, right? I work in the business. Rents are softening in a big way, trust me. Particularly at the upper end, $15,000, $20,000 rental range, those rents are softening in a big way. So you can get a 1-bedroom or a studio apartment on the Upper West Side for like $2,200. You're telling me if you make $100,000 a year, you can't afford the $2,000 a month in rent? Yeah, you can. It just has to do with lifestyle. It's all about budgeting. But I get it. It's expensive here. I'm not trying to say, oh, it's, super easy to live here. It is expensive, and it's only getting more expensive. Speaking of expensive, guys, check this out. You see this? This is the new congestion pricing that's not yet going into effect, but they've built the cameras there. You see that? There's the cameras. So if you drive past 60th Street headed southbound, they haven't determined the fare yet, but it's either going to be between $9 and $29 a day, which is crazy. Between $9 and $29 a day. Sharon says just need to find roommates. Yeah, a lot of young people here live with roommates for sure. I know Chip Hunter says, what, $29? I know, I almost had cardiac arrest when I read that myself as well. So there was an article that came out. Apparently they have to vote on what the amount is going to be. And it's undecided. But what was proposed is a range between $9 and $29 a day. So it'll probably fall somewhere in between, but I mean, completely egregious nonetheless, right? Even if it's $2, it's totally egregious. I mean, think about that. You have to pay just for driving in the city. That's insanity to me. That's just ridiculous. And it's not going to hurt the wealthy, because in New York City, there's extremely, extremely wealthy people. They're not even going to think twice about it. It's going to hurt the middle class and the lower class people in the city, just like everything else. Every new policy here that is supposed to be put in place to help the lower and middle class, it just absolutely,
curb stomps their jaw into a million pieces on the sidewalks in New York. It just is the same every time. Because if you are, say a big investment banker, a big managing director, and you have a chauffeur that takes you to your office, right, at 200 West Street or on Park Avenue, what's $9 to you? You're paying your chauffeur, $100,000 a year to drive you 2 blocks, 3 blocks, right? So they don't care. What it's really going to impact in a big way are middle-class people that are commuting to work from New Jersey, commuting to work from the Bronx, Queens, Brooklyn, Staten Island, right? That's who it is going to impact. And here they are, right here. I don't know. Who here, I would like to hear from people who agree with the congestion pricing. Do you think it's a good idea? Because look, I have an open mind. If you think it's a good idea, I would just like to hear why you think it'd be a good idea. Ryan Beck says big government loves to keep people poor and dependent on them. Delaware Gold says, what does it cost to cross the Verrazano Bridge? I'm actually not too sure. I don't even remember the last time I've been over the Verrazano Bridge. I think the last time I've been over to the Verrazano Bridge was when I was in college. Chip says, what is the money going to go towards? Well, it's really used as a deterrent to stop people driving, but I sort of have a theory about this. Ridership is way, way down in New York City for the subways, right, the MTA. And the MTA is running at such egregious loss that it pretty much needs to be fully subsidized by the taxpayers. So they're trying to find any other little thing that they could do to, number one, force people back into the transit system and fundraise money to make up for the delta. But I mean, here's the thing. I don't know. I don't want to get too political. They're probably going to raise taxes even higher than they already are. At some point, it's going to push people away. And because at some point, if you're a billionaire, right, if you're worth $1 or $2 billion, at some point, you're going to get pissed off and move to a tax haven. Not all of them. Not all of them at all, but at some point, some of them do. And that's a big problem, because if you look at sort of tax revenues in a lot of major cities, particularly Chicago, New York, LA, the majority of the revenue comes from a handful of people. So if you have just a couple heavy hitters, give you the finger and say, okay, pound sand, that's a problem. That's a big problem. So, think about the hit to the city of Chicago when Ken Griffin left there. That is a major hit. Like, that actually has an impact. So, I don't know. We'll see what's going to happen. I don't know. Ryan Beck says, I'm guessing Ken Griffin spent 6 months in a day in Florida. I actually am not too sure. I mean, to be fair, they do still have a pretty big operation, like a massive operation in Chicago, but you're probably right.
Mister.
This is a really nice view here of the Trump Tower.
Thank you.
You're welcome. I heard that too. So Daryl from Chicago says Chicago is implementing an additional tax on a sale of homes over $1 million. So they've done that in New York. It's called the mansion tax. But really quick, I have a question for all the car enthusiasts. We always see this car here. Is this the new electric Porsche or no? I think this is. I think this is the new EV Porsche, is it not? I think this thing looks so cool. Again, I'm not a big car guy, but huge fan of EVs. DC's is beautiful, isn't it? It's really nice. I've become like a massive EV enthusiast. Obviously, Tesla is my go-to. They reported earnings today. If I had the money, I'd get a Tesla Model X. But that Porsche, the EV model, is so cool as well. It's like amazing. All right, let's let the rickshaw guy pass us. But yeah, so here's another thing that could potentially impact the California real estate market, particularly LA, in a really, really big way. They're starting to tax heavily the sale of multi-million-dollar mansions. So I think you're going to see a glut of supply come on the market in LA specifically, of people just trying to get out before they have to pay all this, massive, ridiculous tax, which is crazy. I mean, they do the same thing here in New York City, which is wild. So if you're shopping for an apartment or a house in New York City, you have to take into account, if you're purchasing something that's over $1 million, you have to pay a mansion tax. That's why sometimes to negotiate a deal, you'll see an apartment listed for $999,999. And you may be asking yourself, well, that's strange. Why is that? Well, you're going to get a ton more inquiries on that property than if you had listed it for $1 million, let me tell you. Just the dollar difference saves you thousands in the mansion tax. Yeah, Ryan Beck says Josh Altman, pretty outspoken about it, but they've been dealing with it for a while now. Yeah. He's, I think, one of the top brokers in LA.
See?
Loyal says, I personally like my supercharged Hummer H2. I mean, if it could fit in New York City, I'd be all for it, but unfortunately in a place like New York, it just doesn't fit. But those are cool. Those are cool cars, for sure. All right, everybody, I want to thank all of you for joining us tonight on Walks in Wall Street. We do have to call it a night tonight because it is getting late. If you enjoyed the stream, feel free to leave a like on the video and click the subscribe button if you're new. We will be back here tomorrow live at 8:30 p.m. where we will be exploring Tribeca as well as Soho. If you want to sign up for our free newsletter that we send out every other Thursday after the market closes, if you scan the QR code and punch in your email, you will be signed up to our Substack for free, where you'll receive all of our equity research, fixed income, real estate research for free. And lastly, if you're looking to buy, sell, or rent anywhere in New York, feel free to reach out to me at the email address below. We would be happy to help you out here at the Kirsten Jordan team, and that guy just blew a red light, which is always good to see. So, Mr. Metalhead, appreciate it. Hawaii, thank you for joining us. LA, Ryan Beck, all of our moderators, Sunshine After Rain, Larry Van D, T-Cal, Travelnista, thank you so much. Mohammed, Stephen Bate, Bree Grams, Roland, Sabrina Fair, Colton Manning, Delaware Gold. And there's always a bull market somewhere. You just need to know where to look. And I'll see all of you right back here tomorrow on Thursday. Have a good night, everybody. Take care.